Hi, Jonathan York with my financial partners looking at investment markets. US stocks taking a little bit of a breather at the moment, sort of treading water, really waiting to see what comes out of the China-US trade talks. Interesting to note on that, that China has now reduced its target GDP a little bit. We're looking for a target range now of 6 to 6.5%. Now, while that's come down, quite a bit from the sort of highs of a couple of years ago, sort of 10, 11%, China couldn't continue to grow at those sort of levels. And 6 to 6.5 is still pretty much double most of the Western economies. Very little came out of the recent summit meeting between President Trump and Kim Jong-un. That was curtailed as both sides couldn't come to a recognized agreement. Now, on the back of that, President Trump has gone on the offensive, launching a further attack on the Fed and Fed Chair Powell. While not naming him specifically, he was sort of critical of the fact that the Fed was still increasing interest rates and had a strong US dollar, which was being detrimental to the US economy. Just possibly that might be trying to sort of divert a little bit of attention, as it looks like the national emergency will be voted down in the Senate. It's already going to be voted down in the House, and that's a further blow to President Trump. The Fed will meet later this month, but most analysts and economists expect the Fed to leave rates unchanged. And it's just going to be interesting to see what their dot plot is, because certainly some of the data coming out of the US now is a little bit on the soft side. Oil's had a little spike. It's back above 55 now, heading around that sort of $56.5 a barrel. The Brexit clock is still ticking now in the month of March the 29th deadline, and it really looks like this is going to run down to the wire. Certainly a hard Brexit looks pretty bad for the UK economy, and it's just going to be very interesting to see if there is a sort of an 11th hour deal. Quite a few analysts and commentators, sort of expect an 11th hour deal. They say because really a hard Brexit will be pretty detrimental to the UK economy. Here in New Zealand, the fallout from the tax working group is still sort of evident. A lot of talk about the capital gains tax, how that's going to sort of impact on people's savings, especially KiwiSaver. Just going to be very interesting to see how that does sort of play through. The government is trying to encourage individuals to save for retirement. But then if you're going to add a further tax burden on there, that could just be a further sort of hurdle to some people for saving. Especially when you see those who aren't in KiwiSaver will still get government super once they reach the age of entitlement. So there is certainly a little bit of a feeling out there that people who are saving for their retirement are just being taxed for those who aren't. So certainly the government will have a pretty tough call to make in the next sort of 4 to 6 weeks when it comes out and puts forward which of the recommendations it will take. A couple of bonds in the marketplace. Argosy Green bond, 7-year minimum rate 4%. There's also one out there from Transpower. That's going to be a 5-year. Rate hasn't been set yet, but it looks like sort of between 2 to 3%, probably around sort of 2.7, 2.8, something like that. Now, if you are interested in those two, call us on 0800 867 323. Interesting as well what's going to happen, the sort of growth predictions for the New Zealand economy. Certainly the weather and the droughts starting to have a little bit of a marked impact out there on the dairy sector. And it's just going to be very interesting to see how that plays through in the next sort of 4 to 6 weeks. Now, if you are looking for income options, there's plenty of alternatives available out there. And call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.